Hey, good morning, everyone. It's Coach Chris from AccuTrader.net coming at you with a little recap video, a different kind of recap video for last Friday's trading. Last Friday was a really cool day, in my opinion. We had some news in the morning, and market reacted in immediately, and then throughout the day acted real strange. I was lucky to get on the right side of the trade most of the day and had a really good result. Before I start, I just want to remind everyone that trading futures is extremely dangerous and hazardous to your financial health. You can and probably will lose money if you don't know what you're doing, and even sometimes if you do know what you're doing. The complete government disclosures are listed in the description below with some links, so if you're interested in those, click on the links and take a look through them. Also, there's a lot of scammers going around in the futures space online. I will never contact you and ask you to trade your money for you. So if someone is pretending to be me, it's not me, and that goes with other groups. I see a lot of people imitating, even on Top Step, they'll imitate some of the personalities on there. So just be careful. These guys are so busy. They're not going to text you and ask you to trade for them. And also, they will never ask you to trade crypto. Myself also. There's a lot of scammers, so just be careful. So what I'm going to do this morning is I'm going to take Friday's price action in replay mode with the AccuTrader.net system on the screen. Now, what I've done is I've gone to the 2-minute chart on this. When you're in an environment where the market is moving very quickly, if you go higher in time frames to day trade, although the information is somewhat accurate, the market is moving around too quickly for the indicator to give good, precise signals, because what happens, it may have a momentum signal to enter a trade, but the momentum quickly fizzles out. In order for this system to work the way it is designed, it can tell you when the momentum is changing in either direction. However, it then requires a continuation on the part of the market. So in other words, triggers along, okay, you get into the trade. If that fizzles out, obviously you're not going to get a big move. But if it triggers the momentum and then the momentum of the market continues, that's how you get the big trades. Also, concentrate on getting out of a trade quickly if it's going against you. It doesn't hurt to take a losing trade. What we don't want to see is a bunch of small wins and then a big loss. What we want to see is a bunch of small wins, small losses. Hopefully you'll be ahead, and then you're going to get that big win that will make the overall P&L on your account make up for it. So I'm going to do this in replay mode. I've got it at 1x speed, and I'm starting right away at 7 in the morning. So here is that news candle. Let me just pause that a second. This is the 7:30 news event, and that candle was 90 points wick to wick. And I'm just going to back up a little bit here and redo that because it happened pretty quick. I'm going to go back a little further. It happens very quickly. And I would never recommend trading through a news event like that. You can wait for it to end and then start trading. Let me just stop this a second while I'm talking. Like here, we got a sell signal at 7:20, which is 10 minutes before the news. I would stop trading about 7:15. And in fact, there's a lot of prop firms that don't want you trading through the news. I have a Take Profit Pro account, and they emailed me that morning that they reminded me that you must be flat during that particular news announcement. At least 5 minutes, I believe it is, before, and 5 minutes after. It may be one. But either way, I wouldn't trade it because you'll see what's going to happen here. And there's no way the algorithm can respond to that because it happens so quickly. And what normally will happen is it's mostly the reaction is algorithmic. And so what you'll see is you'll see either a quick spike up, and then it'll wick down and go the opposite direction, or vice versa. It'll spike down, take out all the stops that are in place by traders, hoping to get a head start on it. It'll pop all those stops, and then it'll reverse one direction, and you'll get stopped out and possibly even take a large loss, because we're looking at 50 or more points on most of these, sometimes 100 or more points on some of these reactions. And so if you're trading the big boy, the full contract, 100 points, that's a $2,000 possible effect to your account. So, and or getting stopped out without ever entering the trade. So let's watch this. We're starting here at 7:24. The news is going to come very quickly. Remember, this is a 2-minute chart. Okay, so here's the start of there's the news candle. You see, I couldn't even stop it in time. And sure enough, what did they do? They wicked all the way down here. What is that, 50 points? Probably 45. Almost 40 points. They wick down, and then, of course, they start buying and go in the opposite direction. Now, you'll notice that this did trigger a buy signal, but I still would not trade that. And that could ultimately go out. I don't know. No, it stayed on. Okay. So now we're progressing. The news has happened. Now, this is what I'm saying. You could start to trade either on this candle or this candle in that direction, because the momentum is probably going to take this higher. Now, you'll notice right here, this red X, with this system, once you get a trigger in one direction, it will print an X when it thinks it's a good take profit location. Now, excuse me, I apologize. If you're trading with more than one contract, what you can do is you can either exit your whole position at that point, or you could get, scale down and let some other contracts run. Now, remember, we do have the opening of the market coming up here shortly, too, at 7 or at 8:30 Central Time, which is my time zone. So the chance of this just continuing to go all the way up, we probably will get a little bit more, but it's probably also going to retrace some of that, because a lot of times this is an overreaction. So you want to be real careful with putting on huge size here, knowing that the open is coming up. So let's continue on. There was a second take profit here, and then we reverse down. This red line on this indicator is what I call the basis or home line, and it's a calculated algorithmic line where price at that time likes to revert back to. It's a weighted average where price likes to revert back to. So we have this initial push up, take profit 1, take profit 2, and now you'll see it retrace down. Now getting into a consolidation phase, getting ready for the New York Open. Now we'll see how much lower this goes, or if it's just going to stay on this basis line. Okay, we're getting closer to the Open. We're now at 8:15. We'll see what happens here. Getting really close to the Open now. Okay, so now here's the other thing I would be very cautious of. We're 5 minutes before the Open. We do get a sell signal here. However, just like here where you'll see them clearing out stops and turning out to be just a wick and then reverting in the opposite direction. It's very common that this bar that's printed immediately before the Open is also a reaction in the opposite direction. And we'll just see what happens here. So we got to sell, and look what happens. See, here's the actual Open. We now do get a buy signal. So we had momentum down that triggered, but no follow through. And then on the next bar, it immediately reversed and starts its way up. So you have to be very careful I would not trade up until this bar or the bar after. Either way, irregardless of what happened on Friday, I would not trade this bar. This bar is at your own discretion. It's still very dangerous. You can see how it did go down and then continued up. So then we've already got take profit. Let's just see if there's any continuation here. Look at this. Look at this thing go. And so now we've got a take profit 2, consolidation going up a little higher, and now we're reversing down. Now, with this system, this will not pinpoint the actual reversal. However, I want you to take a look at a couple of things. This system is designed not only to identify potential entry points, this bar, take profit points, but it's also designed to keep you in a trade as long as possible. Remember earlier, I had told you what we're looking for is small wins, like here where we got a little bit, say you got a little win. Here, that's the prior. But what we're looking for is these smaller moves, either to make small wins or losses. And then finally, when we get into a nice trade, these nice continuation, this is going to make you the money, okay? This move, am I measuring? From the top of this entry candle to right here, that's 120 points. I don't care what size you're trading, that is a big trade, okay, in anybody's book, okay? What I was going to say, the way that this algorithm, or this indicator rather, can help you is, notice how this cloud area flared out. See how skinny it had gotten down here? That's because the liquidity in the market here had narrowed down. See how small these candles are? We got doji candles, very small candles in comparison to around here. So when that volatility compresses, this cloud compresses. So now we're getting these big candles, and what that's doing is it's stretching out this volatility cloud, and it's also pulling this basis line up with it, this red home line. And so when we get this kind of separation, not only above this red basis line, but above this cloud line, we know we're safe staying in this trade. Now notice the algorithm is very conservative on its take profit, okay? Because, I mean, by the time we got the second take profit signal, we're already, even if you got in at the very top of this candle or the next candle, you're already 80 points in profit, okay? So now it's saying, hey, it may be time, because this is almost a doji candle. That may be a sign that momentum is slowing down and or getting ready to reverse. So you'll notice, remember, this is a 2-minute chart. We come up here and we're way above this cloud even. Not only do we have good separation between the basis line, we're way up with this black gap. So we know we're still good, okay? And so here, then we enter a little period of consolidation here, and we actually get a little bit of pullback, well, more consolidation before we get another entry up. So ideally what you do is you would take a small profit here, or what you could also do is move your stop loss up to break even at that point. And now you're in a free trade, okay? You cannot lose on the trade. The price cannot go below either a small profit or at least, a small profit at that point. Then you get to this point where it's recommending you take profit, this red X here. You take a part of I would take 50% off, to be quite honest. You're up 80 percent. Now, if you're only trading one contract, fine. Now you start aggressively trailing your stop up at that point, or take profit completely and lock it in. But if you took, you just trailed this aggressively and tried to get a few more points, because ultimately from this point, which we said was 80 points, you're getting almost another 40 points out of it, which is, here again, this is a huge trade. These trades don't happen often, especially where you can feel comfortable when you're in this trade with this system, knowing that with this distance between the red line and where price action, the bottom of the price action is, it's very unlikely that all of a sudden, with this kind of momentum, all of a sudden you're going to get one of these candles and come way down. You may lose 10 or 20 points, but you're not going to get bombarded out. So look at, this is the lowest point that pulled back. The separation between there and the basis line is 17.5 points. So we're in no jeopardy. Now, we get up to this point, we can start to see some exhaustion. We can see, which is signified by, this is what we call a doji candle. It's a candle with big wicks and virtually no body. That's an indication of indecision and that the tide may be turning. And so what happens? We get 1, 2. Sorry about that. I got interrupted. As I was saying, price is starting to exhaust here. Doji indecision. You can see these are smaller. The bottom wicks are getting longer with no top wicks. And here you actually get a down candle. And so let's continue in this and see what happens here. I'll stop it. Consolidation, reversal. Now, you can see over here, whoops, that was interesting. This thermometer here on this side will actually change color based on whether the momentum is up or down. And you'll see down here on this line here, we're starting to see some of these bars turn red, which means that the market is starting to reverse. And that's also a sign of caution. Now would be a good time, if you haven't already, to get out of this trade. And then you'll see once it falls below, well, there's more consolidation, red thermometer, and there we actually got a down signal now, and you can see it's reversing down. So I'm going to go ahead and end the video there. I apologize I haven't made more videos recently. We're traveling and had some company for Thanksgiving holidays. Now I'm back to work for a week or two up until the Christmas holidays. So I've got a lot of things I'm working on. I've been testing a lot of different things that I'll be talking about. And the ES channel system is still, I trade that on the side. And that's a set it and forget it type of trade. And I will occasionally do videos on that. But for the time being, I'm turning my attention back over here because I'm getting such good results with this AccuTrader system. And I think it can help a lot of traders, even if they don't use it for their entry points. Ultimately, we don't want to rely on an indicator for our entry points. We want to be at the point in our trading where we're looking for entries based on the price action and our research of when certain setups occur. Then we go ahead and enter a trade. But when you're new, you don't have that knowledge. So you can either react to these entry symbols and or know that, well, this fire now would be a good time to possibly enter the market. But here's the bigger thing. Yeah, entries are important, but we want to be on the right side in the right direction of the market, and that's where this can really help you. So in other words, if price action is above this red basis line, granted, we know what happens here, but irregardless whether this happened or not, if this price action is above this red line and this cloud, you're only looking for longs, okay? You would never, ever, ever enter a short up here trying to guess the reversal. If what you would do is you would hopefully be in a long already and then have confidence knowing that you can stay in that trade, yes, start to move your stops and take a defensive position. But there's no need to worry about exiting yet when we're way above this basis line like this and this cloud. The market is not ready. It has given you no indication at this point that it's ready to reverse yet. Up until this candle here, there has been nothing here to show you to get out of the market and or try and sell a short. Now, it starts to consolidate here, and after all of these bars of consolidation, and we're getting some up and down, yeah, things are probably, starting to get exhausted. And now it isn't until this candle here that price action actually gets below that red basis line that you could even consider getting into a short. So I hope that helps. Also, please feel free to comment below my videos at any time, positive or negative. I'm a big boy. I can handle criticism. There's multiple ways to trade. There isn't just one way to trade the market. Everybody trades a little different, okay? And every one of us has a little different trading style. Some people like quick in and out scalping. Other people would never, ever in a million years consider that. I'm somewhere in between. I like a little bit of combination of both. But bottom line is I like making money also. And so that's where in the back of my mind, and then we also in the back of our mind, if we're trading on with prop money, we also have to take into consideration the rules of the prop firm. Especially now where we're seeing some companies are denying payments for gambling behavior, which I think is rightfully so. The design of a prop firm is to teach you how to trade in a simulated environment. So once you are funded, you can actually make money. Or if you graduate to your own personal account, which I have done, many years ago, you don't want to keep blowing out that account. That's your own cash money, and you don't want to blow out of that. You want to stay and build that, and then use some of the profits for everyday expenses, just like any profession. So I hope that helps. Like I said, though, please make comments if you'd like me to make a video around a certain subject in the future. Also, I'm always looking for recommendation ideas. I apologize for going on so long. Thank you also to all my new subscribers and my new customers. I sincerely appreciate it, and will do everything I can to help you in any areas you're struggling with your trading. So take care. Hope all is well. See you soon. Coach Chris out.